Well, I'm back. Actually, I've never left. I was just postponing this video for a bit just because I've been focused more into the protocol that I'm part of right now, as well as a course. I'm going to talk more about that in a little bit. So good to see you if you're still here, and welcome to the channel if you are a new viewer. Throughout the lifespan of this channel, and even before this channel, I've been in this everlasting search for a yield protocol, or for a place where to deposit my money, where to farm yield, where to make that money work passively for me. This is why the channel was called DeFi Farmer before, because we were looking for places to farm tokens, to farm revenue by staking something, by depositing something. Well, then I kind of reached a sort of nirvana where I even made a Twitter thread about this. I'm gonna leave the link down in the description so you can read it. After exploring plenty of protocols, plenty of farms, vaults, places like this, I've gotten to the conclusion that the road at one point splits into two different roads, and we have to choose which one to go for. And these two roads might fit one person, but they might not fit the others. This is why we have a choice to make. What is this choice? Well, one of these roads brings way more yield, but it requires an immense amount of knowledge, which is something that not everyone has. Not everyone can spend hours a day, months studying something to understand the concept to get a higher yield. So sometimes they choose the faster, cheaper way, which is the second one. So what are these ways? Why should you choose one over the other? Isn't it simple that you should choose the one that pays a little bit more? Well, not really. Sometimes, depending on your lifestyle, your life choices, or even your investment strategy, you might go for a lower risk with a lower, more passive way to invest than for you to invest more time into investing itself. So we have these two roads to choose from. The first one is actually, I made a little paper right here, is delegate your money. And you see these stars right here on the bottom. I'm going to explain what they mean. So the first road, let's say the road to your right, is to delegate your money. And this way, you're going to delegate that money to a protocol, to a vault. You're going to stake that money somewhere, and they are going to go and find the yield for you. You're just going to deposit that money, and everything is passive after that. Then they're going to go look for the best yield opportunities. Those are aggregators. Those can be Clip Finance, those can be Grizzly, which everyone has been talking about lately, or any sort of aggregator, or simple staking mechanisms like Beefy or Liquid Swap, Spirit Swap, whatever it is. These are just passive ways. You just deposit your money there, and then other people or smart contracts are going to do that automatically. Your money is going to be managed by a smart contract or by someone else who knows what they're doing, because they invested time and effort into learning that. And then there's the second road, which is a way better road if you want to jump into it like heads first into the market, into understanding crypto, into understanding finances as a whole. But that requires a lot of time from you to learn, to sit down, understand. You need to sit down and do the boring part first, which goes way past then do your own research sort of thing that we hear online, which is find the source of yield yourself. So you can see right here, we go to 4 stars out of 5 stars. So what do these stars mean? When should you find the source of the yield yourself? When should you delegate your money? Well, if you are a person who works in 9 to 5, you want to go for the delegation thing. You might want to start with delegating your money with aggregators, or just by depositing into vaults, whatever. This way, you need to take very little care of what is happening in the market or what is happening with your money at all times. It's a pretty simple concept of staking, depositing, leaving it there and forgetting about it. So you can see that 1 star, meaning that it is very easy. There's no risk with that. But on the other hand, that is also very little return. We're looking at 5%, 10%, 15% per year. This is talking about stablecoin farming only. If you saw Jesse Echo's this video right here, where he talks about Grizzly, you can see there's a system where he can earn 200 and something, 256, if I'm not mistaken, percent APY on Grizzly, but that is not a stablecoin farm. I'm talking about full stablecoin, USDC, USDT, SUSD sort of reward. So you're getting paid and you're using only stablecoins. Well, so that number goes out of the equation. When we're getting paid in Grizzly tokens, if I'm not mistaken, Honey tokens, whatever it is. So even though we have a base of stablecoins, you only touch stablecoins, you only deposit stablecoins, you receive other tokens, which if you know about these tokens, you know that they tend to go down in price eventually. Tokenomics don't lie. Governance tokens don't have the best tokenomics ever. They usually are used to pay high APYs to users, which eventually will end up dumping that token because they don't want to use that token. But then when you find the source of yield, you require a lot of knowledge. You require an understanding that goes beyond just depositing that money. Where does the yield come from? How does it do that? Why does it do that? And how can I be part of that in an active way? For me, it was very simple to transition to this, to finding, because I already am a content creator. So I have to study on everything that I post, on everything that I create. There's a lot of time behind each and every research that I do. This is my 9 to 5. Crypto is my money machine, is how I make the majority of my money right now. So when I found about crypto options again, I saw that right at the bat, a way for me to make more money in a safer way, because this goes back to stock options, my stock options portfolio, which was a steady way for me to grow my stock portfolio, which was by selling options. And now we have that in crypto, but still this wasn't fully stablecoin related because you needed the asset. Well, on Lyra now, and eventually on Syncquote, which is the protocol that I work on. I'm part of the team, I work in the marketing area, but with Lyra, you now can collateralize your options, the options that you're gonna sell, all in stablecoins. So how it works on stocks and on other crypto options protocols, when you sell a call, you need to have a collateral, and that collateral is in the underlying asset. So if I'm selling a call on Ethereum, I need to have Ethereum to sell that call on, because it will be my collateral. But now on Lyra, we have stablecoin collateralized calls, so you can sell a call collateralizing only with USD, with SUSD, which is what they use, synthetic USD, which is a blessing. Of course, we have our downsides for crypto options in general. Crypto options are a little bit different than stock options, but on the upside, your portfolio is only in stablecoins. You're not going to hold synthetic Ethereum. You're not going to hold any other token, any other governance token. You don't need that. It is fully in stablecoins. The majority of the time, people don't understand what does that mean. I'm not having any volatility in my portfolio. And that is a blessing, because I don't have to worry about buying the dip on my portfolio. I don't have to worry about impermanent loss or my tokens going to zero. Well, of course, with stablecoins, unless they depeg, but this is a very slim risk. With this strategy, we are talking about a fully stablecoin farm with crypto options. Well, I've covered crypto options. How do they work and how do I make money out of this? Plenty of times here in this channel. Let me show you right now one of the positions that I have right now. You can see right here, I sold this $1,400 Ethereum put. My collateral is $1,300, and that collateral is SUSD. It is stablecoins, and I got paid $31 in premium. So I collected, this is around 2.2% or 2.19%, something like that, for the week, for 7 days. And I'm doing this consistently. Last week was the first week in a long time that I had a loss because Ethereum had that huge spike. If you look at the charts right now, let me see if I can pull it up right here. See, Ethereum had this huge chart. I had green weeks before that. You can see all of these green lines right here are weeks where I sold either calls or puts, and I had a profitable week. This week was the week that I lost some money, but I collected 2.2% or 2.3% in premium, and I lost 8. My portfolio actually got a hit by 6% loss in that week, but we are recovering those in this week. For example, this week seems that is going to go well for me, collecting that 2.2%. Then next week again, we do way more win than we do losses. So far I only had 2 losses to 12 or 13 actually wins at all. So the downside with crypto options is very low if you know what you're doing. But as I said before, this requires lots of work on your side, work as a user, work to understand how crypto options work. Why are they priced this way? How can you collect a weekly income from this, which is where my course comes in. I'm not going to be trying to sell this course to you. You don't have to buy it if you don't want to, but this is a steady way for you to make money with stablecoins only. If you go back to Jesse Eccles' video, he was indeed using stablecoins to deposit, but he was getting paid in other tokens. Right here, I'm getting paid with stablecoins. And if we go right here, this is the course. It is on Udemy. We already have 45 students. These students, the majority of these are from the Sleep Money Club, which is the Discord club that I'm part of with your friend Andy and the Delegate investor Colin. And these guys are already jumping into the course. It seems that everyone is enjoying this content. The content that I created is over 2 hours of content where you can understand how crypto options work, where you can understand how to make money from it. But as I said, I'm not going to be trying to selling you this course. It is just for people who are actually interested into crypto options. I'm not going to be pushing this on every video. The link is always going to be down here if that's something that is of your interest. I understand that this route means that you have to put some work on, and people don't want to do that. And I kind of understand why. I personally, when I started, didn't want to invest time into this. But I can show you that if you are playing your cards right, you can get a very good yield. You can get a way better yield than any other fully stable coin farms out there. Let me show you this real quick. We have right here a compound interest calculator. If you had $10,000 to start with, and every week you're making 1.8% weekly, you are going to be making 152% per year. 152% per year. So let's say, like me, out of the 52 weeks, you get 8 or 9 wrong. You get 8 or 9 against you, so it goes against you. So even in worst case scenario, when we're talking about deducting 20%, 30% that you lost, you still are well above 100%. So you doubled your capital in 1 year, which is amazing. This is the power of options in general. But now with crypto options, we are leveraging this because crypto has way more volatility than stocks. As we know, you get paid higher for more volatility. In my case, I am making something around 2.2% weekly. 1.8 is my base floor that I try to achieve on every trade, on every week that I do. But sometimes I make, for example, like this week, I've made 2.2 weekly. And with that, look, we are over 200%. Of course, this is a projected number. This is an annualized number from what I'm making on a weekly basis. I don't believe I personally will go over 200% when I do my math on a whole year of selling options. I'll most likely be around 180, 190 maybe percent, which is still ridiculous. I cannot focus enough on how stupid that sounds. 180% APY for stablecoins only. We're not going to pay it in any stupid governance token or any other token that has very low liquidity. No, this is stablecoin only. So it is a very good way for you to grow your capital, but it requires knowledge. It requires for you to understand what is going on, understand at least a little bit about options in general. So I know this is not for everyone. I will be doing another video about how people who are not interested in learning, how they can also profit from this. I found a couple of ways on how people who want to use this power here of crypto options without actually studying about it or actually understanding and looking up these informations on how crypto options work. How can they profit as well? They're not going to be getting into options because of FOMO and then losing money because they don't understand how they works. Well, I already started working something out about this. It's going to come up in these next weeks, so stay tuned for that video where you that don't want to go through all of these hassle, where you can make money as well. But I want to end this video by saying something. If the yield sounds too good to be true, you need to look from where the yield is coming from or how hard it is to get that yield. Which, if you see a protocol offering you 100, 200% APY on stablecoins, you might already step back a little bit. Like, this is shady. How am I getting paid 100% on stablecoins? Well, Anchor was making 20% and everyone got hurt with that. So how is that possible? But then if you got more into it, and for example, for options, you understand that is a little bit more active than passive. Of course, it is just probably 1 hour of your week, but you still have to learn a little bit more. You still have to manually go and do that thing every week for you to get that money. You understand how that yield is legitimate, and once you understand about derivatives, you know that yield is legitimate. This is not taking money from one person and bringing it to other person like it is a drip farm or whatever it is that is popular right now amongst degens. This is a legit way to speculate and to profit in any market situation. With stocks that has been going on for decades now, huge investors like Mark Cuban, Warren Buffett, they do use options on their strategies to make money, to profit even more from what they are holding. So make sure to always understand the risks, always understand why, where, when the yield is coming from, or who is it going to, how is that yield being generated. And once you do that, you will have way more success here in the market, especially right now in this bear market situation. So if you are one of the people already subscribed, thank you for waiting this whole month without any content. I hope this content was helpful to you. If it was, don't forget to like, subscribe, turn on the notifications so you don't miss the next videos, and I'll catch you guys in the next video. So peace.